Hey everybody, thanks for watching. This is Larray Easterwood, father, realtor, entrepreneur, nominee for Kansas City People's Choice Award for Best Realtor. So appreciate everybody for voting for me on that. I wanted to, as I mentioned before, these are hard times and everything. And so one thing that's definitely come up a lot is mortgage forbearance. And mortgage forbearance basically it's an option you can have for if you have a mortgage, obviously, and you're experiencing hard times like what people are doing now, right? Loss of jobs, being furloughed, loss of income, so forth and so on. And so it's a short-term option. But I brought along my guy, industry expert, Pierre Burris. What's up, Pierre?
How you doing there, Larray?
Good, bro. If you can let people know, who you are and what you do for Megastar.
Absolutely. Hey, everyone out there. Like Larray said, my name is Pierre Burris. I am the branch manager for Megastar Financial in Kansas City. Been in the lending industry for 16 years now, and have 4 branches throughout the metropolitan area to serve for residential mortgages.
Cool. So I brought along another industry expert so you guys can, everything we're going to share, is through years of experience and research and everything like that. So again, I want to get a disclaimer. We're not saying that mortgage forbearance is a bad option. Some people may not have a choice, but we just want to make sure you have as much information as possible so you can make an educated decision when you're faced with these hard times. So like I said, we're going to get right into it. I got a definition of mortgage forbearance, which is basically it's an option that you and your mortgage company agree to temporarily suspend or reduce your monthly mortgage payments for a specific period of time. Now that period of time could be, was it 3 months, 4 months, Pierre? What, up to 12 months? How long is that period?
So basically, both agencies are taking a similar approach on the time frame. FHA, or government-backed mortgages, have a little bit more specific period, so that is absolutely up to 12 months. But how the government-backed securities are doing, they are actually doing it in 6-month increments. So if you had a FHA loan, you would go into forbearance for 6 months. And then if you continue to have a hardship, you could appeal for 6 more months up to that 12-month period. The Fannie Mae, Freddie Mac, which are conventional type mortgages, they're going to be more of, they can go up to 12 months, but they're going to be more in the 90-day range to kind of start off. And then you're going to have to show that you are continuing to have hardship before they move those on.
Okay. And you bring something up we're going to get to very shortly. But real quick, let's go over the pros and cons. Like I said, we're going to keep this video short and sweet. The pros, obviously, are times like this, right? Like I said, people losing their jobs, people losing income, some people can't pay their mortgage right now, so that's the pro. It gives you a short-term option. Now, there's a few things, though, we want to get to, which are the ramifications of what happens if you choose this option, right? So one of them is, at the end of your forbearance period, so the 3 months, 6 months, whatever your forbearance period is, at the end of that period, you either have to pay a lump sum of what you did not pay during that period. So during those 3 months, during those 6 months, whatever your mortgage is, added up time to whatever, how many months your forbearance lasted, you got to pay that whole lump sum, boom, right then and there. Or I think, you can take whatever that, so let's say it's 3 months, whatever your mortgage was for those 3 months total, you could take that, divide it up, and add it to your monthly payments going forward. Am I right on that, or is there anything else you want to add to that, Pierre?
You know what, you pretty much did hit the different options. So essentially there's going to be 3 options that you're going to have at the end of forbearance period. You can, at that point, if it's available, you can, basically do a lump sum payment of all the monthly payments that you missed in the previous months. That would be option A. Obviously, that would be the preferred option for the servicers, but that's not going to be an option for a lot of people.
Right.
The second option is a payment plan. You can basically talk to your lender, and they can work out a payment plan for you in that period. Your third option is what's called a modification, to where you can take the amount that you were behind and you can modify your loan to either add it to the end, to change your terms. There's a lot of different ways that you can do the modification part of it. And those three are standard. Now, FHA does have a provision inside of the act. And essentially in that provision, if you, at the time of your forbearance, were not late on your mortgage payment, so as of March 1st, if you were not late prior to that time, they will allow you to take that remaining balance and add it to the end without any repercussions.
Okay.
But it's on an FHA loan, and that is if you were not late prior to March 1st.
Okay.
The sticky part with that is if you were late prior to that and you went into forbearance, they're going to allow that, but there's going to be some repercussions that come along with that forbearance period.
Okay. All right, cool. And then the second thing we wanted to cover is, and you kind of hinted at this a little bit, but at the end of your forbearance period, let's say, for instance, it's somebody that we're looking to buy or sell their home and purchase a new home, or, you know, interest rates are super low now, so people might be looking to refi, right? After your forbearance period, most lending institutions won't allow you to get another loan, such as a refi or a new purchase, for about 12 months. That's in most cases, but you know, with MegaStar, do you guys do anything different? Or is that pretty much standard?
So this is kind of a moving target. So pretty much every day, you know, we're getting new guidance on how they're going to approach this.
Right.
So just let me give a little bit of a background on this. So the guidelines are currently that anyone who goes into forbearance is not going to be reflected negatively on their credit report while they're in the forbearance, unless you were already negative or late on your mortgage prior to your forbearance. Then the lates can continue to be reported, so they just will mount at that point. Now, the issue comes when you come out of the forbearance. So like I said, it's kind of a moving target. The guidance is going to be that the lender will see that you were in a forbearance. It's going to be on your credit. Even though it's not affecting you negatively, it's going to show you had a forbearance, which means you had some type of financial hardship. So in turn, you're going to be looked at harsher to make sure your stability income is back on track in order to refinance. Now, it all depends on how you come out of that forbearance period. If you come out and you make a lump sum payment, or you've been making your payments all along, now that's one thing. Just because you're in forbearance does not necessarily mean you don't have to make your payments. You don't have to, but you can. And a lot of people, they are going into forbearance, you know, with the speculation that they may lose income. If they can still make their payments, I would highly suggest they do that.
So are you like, if someone goes into forbearance, let's say for 6 months, and 2 months in, they can actually start making the payments. They still should make the payments, right? Even
Absolutely.
Okay, gotcha.
Absolutely. They're going to be looked at more favorably that they made the payments and they've made their adjustments and come out of that period than someone who didn't make the payments. And also, you know, you're just going to have less of an amount to recapture when you do come out of the period.
Yep. All right, and then the third thing.
One thing I wanted to add real quick, Larray, is like I said, a lot of it comes to pass when you come out. So if you make the lump sum, you know, great, you're going to be looked at much more favorably. If you're adding to the payment plan, then, you know, your payments are going to be higher. You know, if you had a tough time making a standard payment, now your payments are going to be higher, and that's going to be tough for you as well. But the real key is the modification. A modification generally is looked at very negatively by a lending institution. Now, I can't tell you what a COVID modification is going to look like.
When you put it on the end of the loan, right?
Modification means anytime you change the terms of the loan versus it could be the term of the loan, it can be the payment of the loan, it can be the adding the portion to the end. Anytime you actually modify the paperwork to where your mortgage changes, that can definitely have a negative impact. Like I said, I'm not exactly how the COVID modification is going to look, but a standard modification is a very negative hit on a standard person.
Okay, cool. And then the last thing we were going to cover, which you kind of already hinted at, was the credit implication. So like you just said, you know, it's not going to be a huge negative as far as like your credit score is not going to drop, right, with the forbearance. However, it's going to be a mark as far as, you know, lenders can see that you had a forbearance, right?
Absolutely, yes. So the guidelines are that during the forbearance period, the servicer, lender is not allowed to report you negative on the credit report,
Right.
unless you are already negative. But like I said before, a lot of your credit implications is going to come based on what happens when you're out of that foreclosure. I'm sorry, out of that forbearance.
Right, sure. All right, so that's all we got. We just wanted to let people know. Like I said, I've been getting a lot of people ask me about forbearance. A lot of people don't know what mortgage forbearance is. Even those people that are taking that option, mortgage forbearance, we just want you to know if you have to do that, you have no other choice. We just want you to know what the ramifications are so you can make an educated decision or so you can know what the consequences will be if you choose that option and what your options actually are. You might be offered one option, but we just want to let you know that there are other options. So anyway, that's what we got as far as mortgage forbearance. Me and Pierre talked. We're also going to do another video about the interest rates, right? So the Fed dropped the interest rates to 0%, but how does that affect mortgage industry? We're going to talk about that. So thanks for coming on, Pierre. How can people reach out to you if they have any other questions or anything?
You know what? If you have any questions, you can give me a call. Hit me up directly, 913-238-1545, or you can email me at pburris, BURRIS, at megastar, MEGASTAR, financial.com. Look me up on Facebook. You can definitely find me out there.
Yeah, for sure. And same with me too. I have a YouTube channel that has a ton of real estate videos on there. So make sure you search me out. Just search my name, Loray Easterwood, LORAYEASTERWOOD. You can give me a call as well if you have any questions or know anyone that needs help with real estate, buying, selling, or investing in real estate. 913-952-4203. Or you can email me, listwithloray@gmail.com, just how it sounds. So like Pierre said, I'm easy to find as well. So again, thanks for watching. Hope this information helps somebody. Share this video as much as you can. Spread this knowledge. And we'll see you guys later. Thanks a lot.